you noticed that your money is losing value every single day, even though it seems like everything is the same? Imagine this. You saved $10,000 last year, but today it's only worth $9,700. And next year? Even less. Sounds alarming, right? That's the silent power of inflation at work. It's eating away at your purchasing power without you even realizing it. Prices are going up everywhere. Rent, food, gas, but your paycheck isn't keeping up. So, what do you do when your money is silently disappearing? In this video, I'll show you how to protect your wealth from inflation and even grow it in 2025. Stay with me, because I'm going to reveal some surprising investment strategies you need to know if you want to stay ahead. Inflation isn't just a temporary issue. It's here to stay. As of January 2025, inflation in the US is at 3%, with core inflation at 3.3%. While wages have increased, real wage growth is a mere 1.1%. That means your buying power is still shrinking. Experts like Mohamed El-Erian, chief economic advisor at Allianz, have warned that inflation will likely remain persistent, especially as supply chain issues continue and energy costs rise. If you think inflation will magically disappear, think again. It's cyclical and has been around for decades, from the high inflation rates of the 1980s to the more recent 9% surge in 2022. But here's the catch. You don't have to sit back and watch your wealth vanish. There are ways to fight back, and I'm going to show you the best ones right now. Stocks are still one of the most powerful ways to combat inflation. Historically, stocks have outperformed inflation by an average of 6.7% annually since 1957. Big companies like Nvidia, Microsoft, and Google can raise prices and maintain their profitability, which helps them thrive during inflationary times. For instance, Nvidia saw a 421% increase in just 3 years, driven by its dominance in the semiconductor and AI markets. But stocks are not foolproof. During a downturn, even the strongest companies can suffer. In 2022, Amazon lost 50% of its value, reminding us that markets can be unpredictable. That's why balancing high-growth stocks with defensive stocks is key. Companies like Procter & Gamble, Coca-Cola, and Johnson & Johnson are great examples. They not only provide stability, but also pay consistent dividends, giving you a steady income stream while inflation works its way through the economy. Real estate has long been one of the best ways to protect your wealth from inflation. Historically, real estate has outpaced inflation by a wide margin. According to the National Association of Realtors, real estate prices have grown at an average rate of 8.6% per year since 1995, far outpacing inflation. If you're looking to invest in real estate, consider residential REITs, real estate investment trusts. They focus on rental properties, which perform particularly well during inflationary periods as landlords can adjust rents to reflect rising costs. But not all real estate is equal. Commercial REITs, particularly those dealing with office spaces and shopping malls, have faced challenges due to the rise of remote work. So, if you don't want the hassle of managing properties, a broad real estate ETF like Vanguard Real Estate ETF, VNQ, can give you exposure to this lucrative sector without the risks of individual property ownership. Gold has traditionally been the go-to hedge against inflation. It's a stable asset that tends to hold its value over time. But here comes Bitcoin, offering an entirely different level of returns. In 2024, Bitcoin rose 150%, while gold only managed a 15% increase. That's a huge difference. However, Bitcoin is highly volatile. While it can provide explosive growth, it can also experience dramatic drops, like the 65% crash in 2022. So, which one is the better choice? The answer depends on your risk tolerance. Gold offers stability, but Bitcoin could bring higher returns if you're willing to ride out the ups and downs. Experts like Cathie Wood from ARK Invest believe Bitcoin's limited supply and increasing adoption will lead to more long-term growth. So, do you want the steady safety of gold? Or are you ready for the high-risk, high-reward opportunity that Bitcoin offers? Energy is one of the most underrated inflation hedges. As inflation pushes energy prices higher, Companies in the energy sector like ExxonMobil and Chevron tend to perform well. These companies are able to pass on increased costs to consumers, making them strong inflation-proof investments. But there's a catch. The world is shifting toward renewable energy. Companies like NextEra Energy and Brookfield Renewable are leading the charge. In fact, the International Energy Agency, IEA, predicts that renewable energy investments will surpass $1.3 trillion by 2025. With this shift, investing in renewable energy companies might not only help protect your wealth, but could also position you for growth as the world moves away from fossil fuels. For more risk-averse investors, ETFs and bonds can provide a safer yet still profitable alternative. For example, the Vanguard Dividend Appreciation ETF, VIG, has delivered a 12% annual return on average over the last decade. This makes it an ideal choice for investors seeking stability and passive income. Treasury inflation-protected securities, TIPS, are another great option. These government bonds adjust their value according to inflation, so your investment grows alongside rising costs, offering a predictable and low-risk hedge against inflation. Let's take a closer look at how two different investment strategies would have fared. John decided to invest his $10,000 in high-growth tech stocks and gold, with a focus on Nvidia, Microsoft, and Google. Over the course of the year, his portfolio grew by 25%. Meanwhile, Sarah diversified her $10,000 into Bitcoin, REITs, and TIPS. Initially, her portfolio skyrocketed by 40%, thanks to Bitcoin's massive rally. But then Bitcoin crashed 30%, leaving her with reduced overall gains. The key takeaway here? Diversification wins. No single asset class can guarantee protection against inflation, but by spreading your investments across stocks, real estate, commodities, and bonds, you reduce your overall risk and enhance your chances of long-term success. Now that you know the best strategies to protect your wealth from inflation, it's time to take action. What's your strategy? Will you invest in Bitcoin, trust in gold, or go for a mix of both? Let me know your thoughts in the comments below. But here's the kicker. If you want to stay ahead of the curve and make smarter financial decisions in 2025, hit like, comment with your thoughts, and subscribe to Cashkeys. Don't miss out on the next video, where we'll dive even deeper into more investment strategies to secure your financial future.